revenue isn't earned, it's designed. Automation is about scale, but scale without insight is simply just accelerated noise. If you're selling out too early, you're likely underpriced. If you are getting somebody who just tells you that it's all about pricing, then you should change your revenue manager.
What are the 3 R's of revenue management? Why is automation without strategy just accelerated noise? And what are the obvious signs that operators are underpricing their rentals? Zak Ali is the special guest on today's Host Planet podcast, and he's a revenue management expert with plenty of advice for short-term rental operators. If you want to fix your revenue management strategy, you cannot afford to miss today's show. Zak, thank you for joining us on the Host Planet podcast. We're going to focus on revenue management, which is your area of expertise. What are the most common revenue strategy mistakes that short-term rental managers are making?
Sure. So happy to answer that, James. So in my experience, one of the biggest mistakes I see, especially very early on, is confusing activity with performance. So for example, a lot of operators start by reacting. So, for example, tweaking prices, chasing occupancy, signing up for every OTA possible, thinking that more visibility will ultimately mean more revenue. But that's just motion. It's not strategy. And I think that's one of the largest mistakes, the biggest mistakes that I've seen in my own experience.
Interesting that you say there about just going on every OTA. I guess there'll be property managers out there just thinking, I want more eyeballs on what I'm doing. And they just go after that. Why is that not necessarily the right thing to do?
I think you have to understand your consumer, your target audience, your segment that you are looking to attract. You know, if you are, for example, a premium kind of operator, you are wanting to target specific set of audience, and therefore going on an OTA that doesn't really give that set of audience to you just wouldn't be the right thing to do. So it's about partnering with those people who can provide you the right type of customer that is suitable to your business, from what you are attracting as a brand and also from what you're trying to attract from a profitability point of view.
And I guess that goes back to building the foundations and understanding who your target customer is. How important are those things when you're starting out, especially?
It's exceptionally important. You know, attracting the right guest at the right time for the right business goal is fundamental in revenue management and just business generally. Opening up to a whole set of customers who are just not going to be right for your business can have detrimental impact, whether that be brand reputation, whether that be profitability, or whether that just be your growth trajectory. So it's really important that you do attract the right guest, and especially at the right time that suits your business goals.
So you've said in your writing that revenue isn't earned, it's designed. Tell us what you mean by that.
Absolutely. So revenue isn't earned, it's designed. So that line basically captures how I see revenue. It's not as a lucky outcome, but it's a structured system. Automation has definitely added speed and efficiency, but strategy ultimately adds purpose. And without it, basically revenue becomes a reactive outcome and not a deliberate design. And that's what I mean when I say revenue isn't earned, it's designed.
What can short-term rental managers do to avoid being reactive?
What can short-term rental managers do? I think ensuring that you have a strategy and knowing what that strategy is, and ensuring your team or all those people who are surrounding you, including tech that is used to support your overall strategy, is clear. I think once you have a clear-cut strategy in place, then it removes the element of being reactive, because ultimately you have to give it your all. And that does mean being super proactive in achieving your ultimate goals from a revenue profitability point of view. So I think ensuring that you have a clear strategy from the very start, knowing what it is that you want to achieve is critical.
If we're to break that down for people maybe at the lower end of the chain who maybe have one or only a handful of properties, what advice would you give to them when it comes to revenue management?
So, I mean, it's an interesting question because a lot of, sole property owners think that revenue management doesn't really apply to them. And it's something that's been invented just for travel companies or the big operators. That's just not correct. If you have perishable inventory, which you do have, if you don't sell that property at that particular time, then it's missed opportunity. So whether you've got a one bed property or a multitude of 50 different properties you're managing, the fundamentals and the principles of revenue management should be applied from day one. And you should build your strategy all around it. Because naturally, through revenue management, and it's more than just pricing, through revenue management, it gives you the ability to not only analyze the data and understand what works for you that will support your overall strategy, but then also at the same time, it opens up a whole host of different areas where you've not seen before through analytics, for example, or through pricing decisions that you need to make, or through yield decisions that you need to make. You have to take that approach, but you have to understand the fundamentals of revenue management initially to go ahead and then apply that across your property. And that could be a 1-bed property or a 10-bed property or an agency.
Let's imagine there are hosts and property managers out there who they're trying to focus on revenue management. Let's say they've signed up for a dynamic pricing tool like Beyond or Price Labs perhaps, and they start using it a little bit but don't really understand it. And maybe they come to you and say, well, I've signed up for dynamic pricing. It's made a bit of a difference, but I don't really know what to do next. What would your advice be to them?
Dynamic pricing is what it is, and I'll talk about dynamic pricing shortly. But I think what's really important to understand, first of all, is probably to take one step back and understand what you require from automation, because dynamic pricing in a system like you mentioned, it's automation and it's supporting you to make decisions a lot quicker than you as a normal human being are able to. However, automation without strategy, in my opinion, is just accelerated noise. And there's a growing assumption out there that revenue management systems are basically replacing the need for a strategy. But the reality is whether you're a one property host or an agency, revenue management systems are powerful assistants. They're not the architects. They're very good at what they do. In terms of revenue management systems are excellent at tracking patterns, optimizing pricing, providing data, valuable data. But the question is do you have a tool or do you have a framework for how to make decisions with it? And that is basically what you need to ask yourself when you're analyzing your performance off the back of the systems that you're using, whether that be through dynamic pricing or yield management or anything for that matter.
I'm sure there'll be property management companies out there, even some that maybe have got 50, 75, 100 rentals, down to people at the lower end of the scale who've got a few rentals. You've mentioned strategy a lot. I imagine a lot of them don't really have much of a revenue strategy. So how do you go about actually getting one? What are the basics and fundamentals that you need to create a revenue management strategy?
I think it goes back to knowing your guest, knowing what it is that you are there to achieve ultimately. So, what type of guests are you looking to attract? What is your ultimate focus? What's your plan in terms of growth? What is it you're wanting to achieve? And what's the route that you're going to follow to actually go ahead and achieve that? And that basically will assist you with driving your commercial strategy more than anything else. So how are you going to achieve that? I've talked about revenue management principles and I've talked about the fundamentals that you have to apply to succeed in revenue management. But ultimately it's everything else that feeds into it. So if you're wanting to list on distribution platforms, then what's the strategy for doing that? Who it is that you're wanting to go and target, what areas are covered. So recently, I engaged in a conversation, actually, I can't remember the author's name now, on LinkedIn, but the question was around regional agencies versus OTAs. And I think, that raised a really important point, in the sense that you can use the likes of Booking.com, Airbnb as part of your commercial strategy, but ultimately, do they drive market share for the region that you're actually trying to target? So as part of your overall strategy, you've got to understand, specifically from a distribution point of view, what will work and what won't work. And again, it goes back to attracting the right customer at the right time, again, for the right price. In revenue management, we have the revenue management cycle, which is largely used throughout the hotel sector. And I think now it is catching up in this space. I just don't think it's quite there yet. But and that surrounds everything you do around, selling the right product at the right price to the right customer for the right time and through the right distribution channel. And that's largely what you would base your strategy on in order to succeed.
Makes a lot of sense, knowing your customer being so important. Let's talk a bit about AI and revenue management systems. So you've said that, as you said before, automation without strategy is just accelerated noise. So explain to us what this looks like in practice.
Yeah, so like I said, revenue management systems, they're fantastic. I mean, I personally, in my career, have had the opportunity to be part of 3 developments in revenue management systems. And actually, one of the development that we did had recently been acquired by Guesty. So it's a fantastic opportunity to be part of. And revenue management systems are fantastic at what they do. They give you valuable data. But ultimately, it's what you put into those revenue management systems that really makes a difference. So the systems are incredible engines, but like I said before, strategy decides the route. I, as a revenue management person, help operators build the map. So operators need to understand that automation is about scale, but scale without insight is simply just accelerated noise. And you still need someone at the controls of that system, steering towards brand alignment, for example, or even guest value and profitability. Now, most revenue management systems today are built to optimize for revenue. And that's, I said revenue management systems, but also anybody using any form of tech, AI-driven tech, which ultimately they want to use as part of their revenue management strategy, are there to optimize for revenue. But what you have to remember is they can only optimize for the kind of revenue you define. And if you haven't configured the system with, for example, a clear forecast or a margin threshold or even a pacing benchmark, then the revenue management system may optimize for top line revenue, but it won't account for profitability, channel costs, or even brand positioning for that matter. So whilst it does its job, it might not be doing your job. And simply put, strategic inputs are basically what transforms, in my opinion, automation into alignment. And that's really where it starts and stops.
How important is it to give your system, your revenue management system, a target?
Super duper important, So let's be totally clear here. A revenue management system platforms are excellent decision support tools. But at the end of the day, they are only as effective as the goal you set for them. And I've learned this also in my own experience of building systems and a user of a system. That simply put, if you haven't provided, for example, let's go with the top 3 bits of critical information that I think you should provide a system. So, for example, revenue forecast, pacing curve, or even profit threshold. The system basically doesn't have a North Star. So it makes pricing decisions based purely on short-term pickup or competitor behavior, but it doesn't factor in your long-term commercial growth or your long-term commercial goals. So if I was to give you an example, say your property is selling fast, 90 days out, a smart revenue management system sees the pickup, But if there's no target revenue or occupancy pacing curve in place, it may continue selling at the same rate instead of slowing down that, instead of basically slowing down to protect yield. Now, that's a missed opportunity to increase price and margin on constrained inventory. Or if you look at the opposite of that, because naturally we get both scenarios, if you're behind pace but haven't told the system your goal, it might hold rates too high and basically miss the demand window completely. So technically it's doing its job by optimizing based on what it sees, but it might not be doing your job, which is to hit very specific revenue and profitability targets. And that is the difference between automated pricing and aligned performance.
Yeah, it's interesting. I mean, if we break it right down, I was speaking to a property manager recently, and he said if somebody comes along to him and says, "Oh, I've got 98% occupancy," he says, "Well, your prices are too high." Yeah. It's that simple, and that's kind of breaking it down, isn't it? Like you say there, yeah. if you're getting loads and loads of bookings, like kind of, there is a point where you get too many, right?
Oh yeah, you need to find the optimal point when to say right, that's it. You know, at what point. Back in the day, I mean, I did a lot of work with Princeton University, when I was back building tech and in hotels. And I remember we used to talk about the Bellman's curve all the time. And, the Bellman's curve is a very, very good visual graphic to actually understand at what point does it become a no-go for you from a revenue point of view. At what point could you add too many bookings, which then basically start costing you revenue rather than you saying, right, this is my optimal occupancy and this is basically what I need to be targeting, because everybody tries to target, or most people try and target 100% occupancies, which we know realistically is probably never going to happen. But what is the target that they should be focusing on? Should it be 60%, 70%, even 90% for that matter? But what is the optimal occupancy at the point where it starts to then go downhill from a revenue point of view?
Yeah, it's an interesting point. I was having a chat with my uncle the other day, and this is slightly different, but similar. And we were talking about rugby league and selling tickets for a match. And he said, well, if you've got thousands of tickets left over, just give them away. I guess if you apply this to a short-term rental scenario, you could say, oh, well, I've hit my occupancy and revenue targets for this month, but I've still got 5 days left to fill. Would you then just sell them at £10 a night to give them away? Like, my argument to him regarding the tickets was, well, if you just give stuff away, you're cheapening your brand, you're cheapening everything really associated with your product. And I guess that would be similar with short-term rentals. You're not going to start and get to a point, well, I've got 5 days left, I'll just give them away for next to nothing.
No, absolutely not. It's what, brand awareness or brand reputation, should we say, forms part of your strategy. And a destruction of any kind in brand reputation can cost you quite dearly in terms of revenue. There's a lot of research out there, and I've been part of some research myself with Cornell, where you can see the direct correlation between an increase in reputation score and what that equates to in terms of revenue, and how much of that comes via occupancy and rate. And naturally, protecting your brand, whether that be through what you do online or whether that be the type of customer that you attract, is fundamental, and it's critical, and it should be formed part of the commercial strategy that is overseen by the revenue leader of the operator.
A similar way of looking at it would be like airline seats as well, wouldn't it? If there's some airline seats left over, do you just give them away, or you've got to protect it, haven't you?
Get me started on airline revenue management. I've done a lot of airline buckets in my days, and it's a very, very interesting concept. And obviously, that's where the whole principle back in 1970s of revenue management started. After the deregulation of the airlines, it's basically the start of revenue management, and it's really an interesting. It's very interesting in terms of what you can do and what you can't do, and how you manage each sector and each load, etc. So we'd probably need a couple of days to go through that subject. So maybe one for another day.
Now, back to your writing and your book, of course, and you've developed a framework called the 3 Rs of revenue strategy: rational pricing, responsive calendars, and reflective positioning. So walk us through each of these and explain why they matter.
Sure, with pleasure. So I use the framework, as you mentioned, called the 3 Rs, and it basically helps operators turn automation into performance. So rational pricing, responsive calendars, and reflective positioning. Simply put, it gives structure to pricing tools and connects raw data to guest behavior, brand positioning, and what your business outcomes are. Each of the R's work in sync, and that's really important to understand that. You've got to think of them as your strategic flywheel, if you like. When aligned, they create velocity, but when misaligned, they create a lot of noise. And that's really how you should see them. Now, if you think about, so many operators who collect data but struggle to make it actionable. Data without direction is simply overwhelming. Most operators have it. Most operators are very data rich, but they're insight poor. They have dashboards, but they don't have decisions. The 3 Rs are how you translate data into design. So if I just start with rational pricing for you, just to give you a little bit more context. So rational pricing is basically pricing with a purpose. It's not just reacting to competitors or demand spikes, but it's intentional pricing. And that's what makes it different. It's intentional pricing for the right guest, the right time, and the right business goal. So as an example, if your average lead time for summer is 45 days, why would you be full at 90 days out? That's not performance. In my opinion, that's leakage. And rational pricing, it considers certain key indicators, if you like, or criterias, and what they would look like are pace versus forecast. So it would look at pace versus forecast. You would look at value by length of stay. You'd look at rate integrity by channel. And lastly, but most importantly, you'd look at profitability after cost of acquisition. And that's what it is.
Very well explained. HostHub is a top-rated property management platform for short-term rentals. HostHub can help you increase revenue, improve operations, and ultimately save you time and money. HostHub has everything you need to manage your properties effortlessly and reliably. It will sync rates and availability across all the channels where your properties are listed, and it includes tools like automated messaging, team management, and expenses. It also includes smart pricing integration, task and cleaning management, and automated door locks. HostHub provides a zero double booking guarantee, 24/7 support with an average response time below 3 minutes, and a fresh and friendly interface that is easy to learn and use. And right now, HostHub is offering a 14-day free trial to any host or property manager who would like to try the platform. Head to hosthub.com/HCH for further details. So, why do you think so many operators collect a lot of data, especially in relation to revenue management and everything else, but struggle to make it actionable?
I just think, I've been in situations like this myself. It goes back to strategy and story. What is the strategy you're trying to follow and what is the story you're trying to tell? It's great. Everybody gets excited when we've got a lot of data and we have a lot of data channels or sources that we can actually collect that from. But I think it's, number one, it goes back to making sure you're looking at the right data for your business, the one that's most relevant for your business. But then at the same time, it's how having the ability to manipulate the data in such a way where you pull out those key insights. Remember, I said most operators are data rich, but insight poor. And it's about identifying those key insights. But at the same time, it's almost having the right benchmark in place for you to be able to reference. So, like I said, as part of rational pricing, for example, as part of my 3 Rs, from a rational pricing point of view, you should be asking the questions, who is the right guest, what is the right timing, and what is the right business goal that I'm trying to achieve. And therefore going back to the data and analyzing that data in such a way where you are able to answer those questions. And I think that's really what makes the difference in being able to analyze the data in the way you need to analyze it to then tell a story for it to be successful in terms of your strategy.
Makes sense. How is rational pricing different from traditional pricing or traditional dynamic pricing or price matching competitors? Just explain the differences between those different things.
It's basically, like I said, pricing with a purpose. So it's just simply not reacting to customers or demand spikes, which naturally that's what dynamic pricing does. It does look at some level of history. It does look at what's going on in the markets. And it does, it goes back to, remember what I said about giving the system a focus and giving the system a goal. And naturally your dynamic pricing will position itself in the way that it needs to do so off the back of what you've told the system that you want to achieve. So yeah, through dynamic pricing, it does react to market demand and spikes. But like I said, intentional pricing is what rational pricing is. And you've got to ask the question, is this right for what I want for my business? And that's basically where the key or critical difference is between dynamic and rational pricing.
For the average host and property manager out there, would you recommend that they use a dynamic pricing tool?
Yeah, absolutely. I mean, I'm the revenue management systems out there, especially Beyond and Price Labs, will be very happy to hear that I'm a massive fan of dynamic pricing. Absolutely, I support it. It's definitely required because it brings you in line with how seasonally you need to behave and how you need to react to markets. You mentioned at the very start of this interview that reactive and proactiveness, or our host reactive. That's basically the difference. Through pricing, which is a large element of revenue management. It's not just revenue management. That I need to make that crystal clear. When people think revenue management, they think, oh, it's just changing a few prices, but it's so far from it. And this is why I wrote the book. In terms of changing times, because back in the day, you used to have people who just manipulated a few prices and that was classified as revenue management. But today, your revenue manager of today needs to be very commercially focused and commercially driven, bringing in critical bits of data, whether that be search activity, whether that be looking at conversion rates, whether that be looking at channel distribution, analytics. All this needs to form part of revenue management. And then that feeds into how pricing works. And ultimately, if you have static pricing, yeah, it gives certain hosts who don't have the capability or understanding of what the impact of dynamic pricing is and what it can actually do for you. It gives them, using static pricing gives them a little bit of comfort, but you're leaving money on the table at the end of the day. And, why would you have the same price points for your peak summer that you would in off-peak winter, for example, when the supply is so much more stronger and the demand is so much weaker? And I always joke to people who ask me about dynamic pricing, and I always say that everybody does it, whether you have whatever perishable inventory you have. And I don't know if Belvita watches your podcast, but if they do, then here's a call out for Belvita. I tend to eat a lot of Belvita biscuits, and I like eating them. That's the normal ones. If anybody wants to send me any, and basically I always go and stock up whenever the price falls. And if the price falls to £1, then basically I go and fill my cupboards. But when the price is inflated, I don't, because I know that the static price, if you like, is whatever it is, £1.30 or 40 or 50. I can't remember now, because nowadays it's always at £1. So that's probably the new static. But ultimately, the way a customer behaves or the way the customer reacts is through dynamic pricing. And whether that be biscuits or, as I once taught my hairdresser to do dynamic pricing for his for his seat, which basically allowed him to shift demand or excessive demand from a Saturday where he couldn't basically cope with the level of demands he was actually getting, to then spreading it out throughout the week where he would charge slightly lower on a Tuesday, but actually it would free up some additional demand for Saturday, to actually pricing for accommodation or airlines. And revenue management, dynamic pricing is critical in this day and age. And it's also very critical given the way the supply works in the market and the challenges that are currently present in the market.
Very well explained, yeah. And first mention for Belvita biscuits on the podcast. I'm pretty sure about that. What are some obvious signs that an operator is underpricing or pricing emotionally?
Sure. Yeah. I mean, you've said it, so it can't be that difficult, right? In terms of experience, if you're selling out too early, you're likely underpriced. If bookings stop after a rate increase happens, that may be what you call emotional pricing, right? So rational pricing is always in dialogue with your numbers, but governed by your goals. You need to remember that ultimately.
What do you think is the optimum occupancy rate for most house and property managers out there?
It's really difficult to say, James, because it just depends on at what point the revenue line starts to dip. So I think understanding your booking performance, understanding how your bookings come in and what prices they come in at, that's another thing, actually, I just want to mention here, that for those hosts or for those operators who don't actually have revenue management systems, and maybe they're starting out on their journey or they're not quite comfortable with the system yet, how do you determine what pricing works for you? What are the optimal price points? And then naturally, whether you've got too much occupancy or not. And it's about analyzing the data points or the price points where you are seeing conversion. So going back into your historical data, for example, understanding what the market economics were and what the external factors were at that particular time, and understanding at what point were people actually converting. And that's a really good starting point for somebody who doesn't have a tool to help them to determine what kind of prices they should be positioning their property at. Because it shows to you, where the conversion sits. However, going back to your point in terms of too much or too little occupancy, I don't think it's something that the STR sector is doing much at the moment. At least I've not really come across it. And it's something that I have spoken about previously. But it's really ensuring that you know how your indexes are working for you. So, for example, you have 3 critical indexes. You have your average rate index, which is basically your ADR. You have your MPI, your market penetration index. My hotel colleagues will actually know what I'm talking about because a lot of them use these benchmarks within hotels. And then you have your RGI, which is your revenue generation index. And the RGI, you can basically position yourself against your market or against your own positioning previous to, to a previous year, for example. And what that basically does is where you have an index of 1 as your benchmark, anything more than 1 means you've got more than fair share. Anything less than 1 means you've got lower than fair share. And what drives that RGI is actually your MPI and your ARI. And then what you tend to do is you tend to dissect that RGI. And let's just say we've got, 1.2, as in we've got 20% more than fair share than our market. We've got to go and understand what that means from a rate point of view and an occupancy point of view. So in rate, we might have 1.23, and in occupancy, we might have 0.85. So you've got to go ask yourself, well, actually, is this the correct strategy? So I'm getting slightly lower fair share in occupancy. I'm getting slightly higher fair share in my rate, which ultimately gives me more fair share in revenue. So maybe that is the optimal occupancy that I should be targeting. Do you see what I mean? And that's really how you can answer the question around what is the optimal occupancy you should be targeting for. And that's why it's not always right to just say, I want to achieve 100% occupancy, because it just might not be the right thing. And realistically, in your market, it might not be doable.
Yeah, absolutely. We've mentioned hotels a few times. Obviously, you've got vast experience of revenue management in the hotel industry. What can the STR space learn right now from what hotels are doing?
I think embracing revenue management. Obviously, I may sound a little bit biased, talking about that. But naturally, like I said, airlines started off the concept of revenue management. Obviously, Marriott were the first in terms of hotels to adopt it from a hotel point of view. But then it's widespread throughout the industry, and the hotel sector has seen the first-hand benefits that revenue management done properly. And like I said, more than just making price changes, it has to be the whole commercial approach can deliver exceptional results. And I think, we need to talk as an industry, we need to talk more about revenue management, whether that be at conferences, whether that be on platforms like yours, whether that be on webinars. But we need to have open dialogue, and we need to share best practice and basically bring revenue management to this sector. It has come a long way. Obviously, even in my own experience, I know that it's come a long way, but it's still not quite there yet.
Zeal works with holiday let owners across the UK, helping them pay the right amount of tax and not a penny more. Zeal's team unlock tax savings for holiday let owners on the purchase, refurbishment and construction of holiday let properties. Zeal's experts also provide advice on a wide range of tax matters, including VAT, stamp duty, business rates, capital gains tax and more. Call 01633 287 898 or email hello@gozeal.co.uk to get in touch with the team. You can also visit the website for further details, gozeal.co.uk. What's a common mistake that you see when it comes to brand alignment and pricing strategy?
Brand alignment and pricing strategy, I think it goes back to understanding who your core audience are. And if you are a premium, for example, provider, then ensuring that you are targeting the right customers, but also ensuring that your messaging that you put out there is critical. So if we just go back to my 3 R's, I talk about reflective positioning. That's the third R. And reflective positioning, simply put, what does that mean? It basically means that you're telling a rate story before a guest ever reads your description. That's probably the easiest way I can put it. So if the story is inconsistent, so if a high price with budget visuals or a low price for a premium promise, then you basically erode trust even before conversion. So reflective positioning is all about aligning price with the perception, matching the tone and photography to brand, and I would say supporting your rate decisions with emotional proof, if you like. So reviews, storytelling, the uniqueness, all these are things that operators need to look at. But I think more specifically, operators think, like I said, they can price premium without delivering premium. And that's really where, in terms of story, you need to have your story clear.
How important is it, do you think, for revenue management teams to be working closely with marketing teams and to ensure that they're kind of going hand in hand? Because you might think on the face of it, revenue managers, they're all techie, they're the geeks in the back working out how much we should charge, whereas marketing team are doing all this creative stuff.
Yeah, it's super important. And if you probably asked me that question about 15 years ago, my response might have been very different. But in terms of today's digital world that we live in, and with the way things have changed, and things are changing at the pace that they're changing on, the traditional revenue manager, they just don't exist, in my opinion. And if you are getting somebody who just tells you that it's all about pricing, then you should change your revenue manager. It's just not the right thing to do. Understanding how marketing work and being the one who actually provides insight into what it is that they want to do in terms of activity is critical. You as somebody who works in revenue management is king of the data and king of strategy. Ultimately, because you've set your goals, what it is that you want to achieve, and you have to have a plan or a roadmap to basically go out and set to achieving that, right? And you have to have everybody on board. So that's not just marketing, that's people who work in product, for example. So, from a marketing point of view, what story do we need to tell? And where does our focus needs to sit in terms of achieving that ultimate goal? But then also at the same time, from a product point of view, if you know that a 2-bed property is doing exceptionally well within your market, and what is the market share made up of that 2-bed property, and you know that actually you've got what you call unconstrained demand, where the demand is too much for you to be able to materialize on, then that needs to be vocalized to the people who are responsible for product. And that is what you as a good revenue person would do in terms of supporting the overall business strategy and commercial strategy to ensuring that we have the right product to be able to put out there to then ultimately support the marketing decisions who are going to be going out there to try and attract the right customer. Remember, it comes back to the revenue management cycle all the time. And then for you to be able to set yield or pricing strategies accordingly. That's really critical.
Yeah, teams have to collaborate. You can't have your revenue management team just working in silo and crunching numbers. Let's also talk about responsive calendars. So most people assume that calendar rules are just admin, but you talk about them as a yield engine. So tell us about that.
Yeah, so it forms part number 2 of my 3 R's. So pricing can only go so far if your availability strategy is basically static or inflexible. Responsive calendars create opportunity. They create real opportunity by making your inventory simply more intelligent. So an example I can give you is I often deal with, or we all, as an industry, we often deal with orphan nights. I'm sure you have heard of orphan nights. So it's, for example, those 1-night gaps left between bookings. I get a lot of operators who tend to avoid 1-night stays because they're, simply put, high costs, harder on operations, and often attract lower value guests. But here's the point. I'm not suggesting you go ahead and open your calendar to a 1-night stay across the board. What I am saying is use your system to identify where a 1-night stay would be pure recovery, a night that would otherwise simply go unsold. So if you have, for example, 90%, because you like that number, 90% occupancy that week, there's 1-night gap between 2 strong bookings. That's basically a sunk cost. So your staff are already on site, your utilities are already running. So letting that night sit empty because your minimum stay rule is inflexible isn't protecting margin. It's leaving viable revenue on the table. So I would say that the win isn't about chasing every single night. It's about recovering value from what would have been lost inventory. And if you use it strategically, the approach allows you to boost your revenue without basically compromising your rate integrity or guest standards, your guest strategy. And that's really how responsive calendars can really make a difference to your yield opportunities.
Yeah, and there's a few ways that you could fill that night. If you have a booking either side, you can reach out to both guests and say, hey, I've got a night before or an extra night. Do you want to buy it? And another thing I heard, I was speaking to Bart Jan Leitz from Optimizer, and he said, if you make those orphan nights available in your calendar, the OTAs will reward you because you've got extra availability, even if you put them at a crazy rate, like 10 times your normal nightly rate. So just by having it available, you might perform better on Airbnb or the other OTAs. And you never know, you might fill that night at a crazy rate.
Exactly. And you are giving more, I guess from an OTA point of view, it's because you are putting out more capacity out there. Then obviously with the way the algorithms tend to work, it gives you more opportunity in terms of positioning, etc. But responsive calendars are critical, and if you think about it, responsive calendars, most people assume calendars are, like you said, simply put, just admin. But actually they are so powerful if you manage them correctly. And this is where, going back to revenue management systems, which are a lot of systems out there are largely just pricing driven. So the pricing systems rather than revenue management systems, but bringing in to the mix dynamically managed calendars or responsive calendars, as my 3 R's go, if you like, it really makes a difference in the revenue and profitability piece that operators are looking to achieve. So it's definitely something that is underutilized at the moment, and it's something that the wider tech partners that are out there should really focus on in terms of further developments.
Absolutely, yeah. Okay, so before we get to the questions to finish, then, what's your biggest piece of advice for operators who want to stop reacting and start designing revenue?
So the takeaway, in my opinion, is revenue management systems are tools, but tools need strategy. The 3 R's that I've spoken about would give you simply that structure. So the 3 R's would give you structure. They bring together data, guest behavior, and brand values. And that's really where real commercial performance begins. If you're not setting a target for your system, you're not guiding your performance. You're just reacting to it. So I think if you're ready to move beyond automation and into intentional revenue design, then ask yourself the question, are your systems serving your strategy, or is your strategy being shaped by your system?
Excellent. And just remind us the title of your book and where people can grab a copy.
Yeah, with pleasure. Changing Times in Revenue Management, and it's available on Amazon. It is a couple of years old, and I am looking at doing a new one. So I will let you know, James, when I've done my new one, and then you can shout out about it. But also, I'll be obviously doing a few more articles around the wider revenue management piece.
Yes. Zak is joining Host Planet as one of our columnists. So expect much more articles from him and talking about revenue management. And of course, when the new book is out, we'll get you back on the podcast, Zak, to tell us all about it. All right, then, Zak, a few questions to finish. Your favorite brand in the STR space?
Favorite brand? I mean, there's a lot out there, but I think my award would go to Hostfully, and more specifically to Joseph, who's hopefully going to be watching this podcast. Massive shout out to him. I think Hostfully as a brand obviously is exceptionally good in terms of what it is that they're offering. There's a lot of great integrations that they offer. And the transition to using somebody like them is very smooth. They have some great work happening in the pipeline. But just with Joseph specifically, he's fantastic. I mean, he really listens to you in terms of what your requirements are and really tries to accommodate you. So, yeah, good job, Hostfully, and great job, Joseph, specifically.
Fantastic. Yeah, we love Team Hostfully, one of our big partners, and we've done so much work with them. And Joseph, of course, I interviewed him earlier this week. He'll be back on the Host Planet Bite Size podcast very soon. You've given one individual shout out, but we'll give you one more. Is there another individual in the STR space you'd like to give a shout out to, and why?
Yeah, absolutely. I think I would like to give a shout out specifically to Alistair Handyside. Obviously, I am a PASC board member, so I'm not being biased at all. But Alistair and PASC generally, he works tirelessly to advocate for the professionalism, the transparency, and the sustainability of the self-catering sector overall. He's not just influencing conversation. I believe he's actually a large part of shaping the future of how this sector is seen and supported at a national level. And I think if you care about where this industry is headed, then Alistair and PASC are a great starting point. And I hope you don't mind, but if you're not a member, you should be a member. So check out PASC.
Absolutely. Yes, very well said about Alistair. He's doing some sterling work. I don't think he sleeps. And we will put the link to PASC in the show notes. Check them out. I think it starts at something like £80 plus VAT for the year, and you will get way more value than that. Final tip then, your number one tip for managers who want to improve their revenue management.
Hit the reset button where required and really understand what your approach is and what it is that you want to do in form of a commercial strategy. So set your strategy and make sure your goals are aligned to your strategy to be able to achieve the overall positive outcome that your business requires and needs and deserves.
Zak, it's been a real pleasure. Thank you for joining us on the Host Planet podcast.
My pleasure. It's been great.
Great to chat to Zak Ali there about all things revenue management. If you want to dive deeper, make sure you head to Amazon to grab a copy of his book. And if you're looking for more free education, head to hostplanet.club, the fastest growing multimedia platform in the short-term rentals industry. We're proud to help hosts and property managers supercharge their businesses by sharing a wealth of free content. Head online to sign up for our newsletter, download our suite of ebooks, and listen to our podcast series. Until next time, happy hosting.